Hello and welcome to another update video about Ethereum. There is not really much new stuff to report. We still see ongoing sideways consolidation. The market is currently dancing around this ascending trend line that we talked about already yesterday. So we have a bit of a trend line there, a bit of a maybe even neckline for a head and shoulders pattern. Could just develop a small head and shoulders. Yeah, and I noticed that today, maybe yesterday I pointed out, okay, left shoulder, head, right shoulder, but the right shoulder would, to look proportional, it would need to maybe exceed resistance a bit. But what I missed is actually that small bit here. So it could be left shoulder, head, and then here right shoulder. So we could just have this head and shoulders pattern. I'm not focusing too much on these. We've got the Elliott Waves. They tell us everything about the context we need to know. It seems like the market is testing currently. I mean, it's dancing around that trend line, but it's sort of respecting the 23.6 Fibonacci level at the moment of the wave 1 to the upside that finished in December, on the 9th of December. The idea is currently that the market could give us one more low, maybe two more lows. That's pretty much consistent with yesterday's update. There is no real change there. The wave 4 gets a little bit more healthy right now. That's what I mentioned yesterday. It was quite shallow. It sort of still is, but it takes, corrections can happen over time or over price. So the more rapid a sell-off is, the less time it might need. But if we don't really see a strong, let's say, corrective rally in this wave 4 here, before wave 5 to the downside completes the move, or again, maybe two more lows, it might just go sideways for a bit. And that's what we see right now. But I'm still watching for one more low or two more lows on this chart. Before that happens, however, the market might rally a little further into the resistance area. Now, that's nothing we can predict, but I can tell you that a healthier wave 4 should get to 2,330, maybe even 2,382. Only a sustained break above that level would indicate that something more bullish is going on. But the market seems a bit weak, just consolidating below resistance, and the consolidation is in very, very corrective fashion, which means basically we have a lot of overlap there. Now, looking at the downside structure, the current assumption is that in both yellow and white counts, they just show a different subdivision, a different way of counting this move down. In both of these, a B wave topped at the on the 12th of January. Okay, so this B wave topped on the 12th of January. We have a wave 1 down, a wave 2 up, a wave 3 down. Then this could be the wave 4, and the wave 5 down. Ideally targeting sort of the area around $2,100. That's the white count. The yellow count is very, very similar. It just means that this third wave, so circle wave 3, is actually not finished yet. So there is a little bit more room to the downside, basically two more lows, which could then hit 2017 or maybe $1,911. And even if we break that level, there's still plenty of space in this support area. What does that mean? That means that the assumption that we are here in a bullish cycle with a wave 2 currently in a pullback, this will only have to be revised below 1677. Okay, so that's how we track a bearish scenario. A break below support would indicate that something more bearish is going on. But until we're not even close. So that's how we track bearishness. But at the moment, we're holding above support. And the indicators, for example, the daily RSI, while they allow for more downside, I mean, there's not a lot of space left, okay, before we get oversold. So at the moment, yeah, I think I have... I can continue to focus on this scenario, no problem. It would be different maybe if we were very close to that 1670 level, but we're really, really still far away from here. It would still allow for another 25% drop to make the overall bullish thesis on this chart, yeah, unlikely, you could say, unlikely. It will not be invalidated anyway, even not below 1677, but a break below the 78.6 retracement changes probabilities quite dramatically. Now, looking at the 30-minute chart, you see that I labeled that now as an ABC. I could possibly see a lot. I mean, I did that yesterday already for you. Basically, not predicting that there will be a C wave up, but pointing out that it's definitely likely because a healthy wave 4 is usually more common than a shallow and very weak wave 4. So a wave 4 that is, let's say, healthy, as I said, could reach, for example, $2,330. That's typically an ideal target for a fourth wave anyway. There's no need to get there, okay? This is purely resistance. This isn't really a target. It's resistance, and the price needs to stay below that to keep the downside pressure high. Above that level, I will not favor another low anymore. You know, it's sort of that key pivot where probabilities change or the market changes its behavior. Yeah, that's my update about Ether. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.